Okay, so share my screen. Okay, we're all seeing my screen, right?
Yes, we can see your screen.
Okay, so I said today we're going to be talking about the basic market structure. Okay, so what is a market structure? Market structure is simply the behavior, condition, and current flow of the market. The current price action, what price is printing at the moment, is what is known as a market structure. So we have three types of market structure. We have the uptrend, the downtrend, or bearish. The uptrend is also referred to as the bullish market structure. And we also have the consolidation or ranging market structure. This when price is not creating any price is not moving in a specific direction, either to the up or the downside. Price is just creating a series of equal highs and equal lows. So for the first, which is the uptrend, so let me write this here. So first we're looking at is uptrend or bullish market structure.
All your favorite trends without
Uptrend or bullish market structure. Okay, so in this type of market structure, this is when price is creating series of higher highs and higher lows to the upside. So when we have this our higher low, this a higher high, our higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. So I said uptrend or bullish market structure is when price is creating series of higher lows and higher heights towards the upside. So this all these are higher low. And the one above is a higher high. So HH is for your higher high and HL is for your higher low. As simple as this may sound, is very important and vital in your day-to-day trading, both for having your directional bias and knowing your overall market trend. Okay, so I said what? Bullish or uptrend is the type of market structure. The price is creating series of what? Higher lows and higher highs to the upside. This is our bullish or uptrend market structure. Okay, so the second type of market structure we'll be looking at, I told you we have three, is coming. The bearish or downtrend. Hope all of you are hearing me. I'm not just talking to myself.
Yes, I can hear you.
Okay.
Yes, sir, I can hear you.
Can you? Can
Okay.
hear you, sir.
Okay. That's cool. So for the bearish or downtrend, this is just the inverse of this. This when price is creating series of lower highs and lower lows toward the downside. That's what we call a bearish or downtrend market structure. So here is what a lower high. Doing this. Okay, so just to ask, is there anyone new to trading view here? Hello?
No, I don't think I'm not new to trading view.
Okay. Is there anyone?
Can we use that? No,
No, sir.
Okay.
well, you think I all used to all these things.
Okay, so just a quick one. So for the tools I use in my trading view, these are the only tools I make use of. Coming, let me cough. Sorry about that. Like, this has been hitting me real hard. Yeah, so for the tools I make use of this. This is the trend line. This is my gain box. This is my highlighter. This is my path to rectangle, circle, text, long position, short position, so my price range and my call outs. So these are basically the only tools I use. Anyone having a question on how to use these tools before I move on?
Yeah, yes, sir. That the price range I asked is I've never
Okay,
used that.
okay, so price range, this is how it works. Let's say you want to calculate how far, how many pips price have covered. So you make use of this either to the up or downside. You can see here it's showing me what's 27.7 pips. Yeah, if I should take it up, I'm seeing 6.8 pips. It's just to calculate a range, price range, like a range, range now from your highest and lowest number. So that's just what this is about, letting you know your pips. So let's say I make use of this basically for knowing my where I take my partials. Let's say I'm in a trade and I know my SL pip is like, let's say 20 pips. So I want to take my partials at 1 to 3. So I should calculate what? 60. So once I calculate 60 pips, let's say this. Yeah, so I know this is my 1 to 3 ratio. That's just what I make use of price range for. Any other question?
The gun box.
Okay, gain box. This for calculating my
So what
premium.
about for the?
You said? Let me be done with gain
I
box.
said,
Let me be done with
okay.
Gambox. Yeah, then you can ask that. So my Gambox, I make use of this for calculating my premium discount and equilibrium zone. So this right here is my 50%. This is my you can decide to name me what you want to call it. So let's say I name this my 1, and here is my -1. Yeah, just what you understand. So anything below this guy here is my discount zone, and I look for buys here. Anything above this is my premium zone, and I look for sales. We're going to talk more about this guy. We're going to make use of this guy more when we talk about premium and discount zone later on in due to the course of our class. So that's what I make use of this tool for. Are you okay with it?
Yes, sir.
Okay. What else?
Okay, so I was talking about the circle.
Circle.
How do you?
Okay. I think I'm going to take this circle out. So I'm not really using it. Let's say I want to mark out a strong zone. Let's say I want to mark out this place to be my low high. This is what I just make use of circle for. But I think my highlighter does it better. My highlighter makes it easy for me, just this. So I think I'm taking out circle very soon off my tool list. Come, let me delete this. So that's what I make use of circle for. It has similar use with my highlighter. But between both, you can just choose which works for you. So any other question before we move on? Hello?
No, sir. No, sir.
Okay. So we're done talking about the uptrend or bullish market structure and the bearish or downtrend market structure. So the last type of market structure we're looking at is the consolidation or ranging market structure. Consolidation. Okay. Or ranging market structure. Okay, so for this is when price is moving towards in a consolidation or ranging market, price is neither creating series of higher highs or higher lows, nor lower highs or lower low. Price is just ranging or consolidating within a particular price range. So this is what the retail traders call this support and resistance, or you can call it demand and supply. So for me, this is when price is creating series of equal highs. It doesn't have to be perfect. Equal highs and equal lows. So I usually take this guy as liquidity. My EQ stands for my equal high. And this stands for my equal low. So this is the market structure that you are meant to avoid. Whenever you see this guy, you're not meant to trade this. You should avoid it and make sure you have a clear market structure. That's either your uptrend or downtrend to take a trade. Once you see price doing this, if you want to take anything within this, you might end up being stopped out. And we don't play game of gambling here, so you have to be very sure of what price is doing for you to take a trade. You just can't stay at any point here and you want to buy or sell. You need to have a strong confidence to do that. So these are the three basic market structure we have. Three main market structure we have. Anything apart from this, everything lies between these three guys: your uptrend, your downtrend, your consolidation, or ranging market. Any question on this? For Miss
No,
next.
sir.
Okay.
No, sir.
Okay. So let's have chat example about these three guys before we move on. I think I'm on what pair NZD USD. And let me check if I can find any chat example here that we can make use of. I think I'm seeing one here. Okay, so anyone Yeah, not knowing the anatomy behind candlestick formation. That's candlestick body, wick, the open and close. We have anyone having any issue on that?
No, sir.
So we'll all go with it, yeah.
Come again, sir.
I say, is there anyone having issues that doesn't know the anatomy behind a candlestick formation? I'm talking about the open and close of a candlestick, the wick.
Actually, it's like I don't, sir.
Okay. So let's briefly go through that before continue. Okay, so let's assume there's a candlestick. This is what a bullish candlestick. So this is a bullish candlestick. This point is open. And this point is the close. So for a bullish candlestick, just as our market structure, bullish is always what? To the upside. So our candlestick, let me make it a part two. So price opened a new candlestick at this guy. This is the open. Sellers push price downward, creating this week was seen here. And what happened? Buyers came back, push price upward, up to this guy. And sellers still managed to push price downward to this zone, and the candlestick was closed here. So depending on the time frame you are, each candlestick is created. Okay, if you're on the 15-minute time frame, that means each candlestick is created after every 15 minutes. If you're on the 1-minute time frame, each candlestick is created after every 1 minute. Same goes for your 1 hour, your 2 hour, your 1 day, your weekly. So depending on the time frame you are on, each candlestick is created every 1 hour. That's if you're in a 1 hour time frame, and that goes for all the time frames. So this for bullish candlestick. This is where the open is. This is where our close is. This week indicates pressure from the this week indicates opposition from. So if this is a bullish candlestick, if you see a week up, this is opposition from sellers. Yeah, sellers push price downward to close it here. Same thing here. These are oppositions from sellers. And we also make use of candlestick to determine price action. Let's say you have a long week. I'm coming this week. So you have a very long week here. We have different types of candlestick, but we're not making use of that, so I'm not going detailed into that. Yeah, so let's say this is a very long week here. This to tell you that what price opened here, sellers, which are the opposition, push price to this zone, and buyers came, pushed price all the way up, and sellers opposed, and we managed to close here. So what is this candlestick itself telling us? This is telling us that buyers are what's in control of the market. For us to have a strong buy opposition, which pushed price up from this zone here, is to tell us that buyers are what's in control of the market. So candlestick itself is powerful. Same goes for a bearish candlestick. Let me change the color. You might overlook all these. These are important and you're daily doing in the markets. So this is what's a bearish candlestick. Okay, so for the bearish, our open is at the top, not below. You know the difference? This is where our open is, and this is where our close is. Excuse me. So price opened here. Let me make use of part two. So price open here. Buyers opposed to push price upward, but what sellers are in control of the market, and sellers push price downward up to this guy here. But buyers tried to oppose and we closed. Yeah. So this candlestick itself is telling us that what sellers are in control of the market. So that's just the anatomy behind candlestick formation. Once you see any candle here, let me magnify one. So let's talk about this guy. This is what are open. This is a close. So price opened here. Buyers push price to the zone and sellers pushed down here. Buyers still came back. Comment. What's this? Let me just, okay, so buyers still came back and we closed here. That's how we end up having a bearish candlestick there. I don't know, the person that didn't have clarification on this, hope you're okay now.
I'm good. I'm good with that, sir.
Okay,
Thanks very much.
you're welcome. So I said we're coming to a chart examples of our uptrend, downtrend, and consolidation market. I think I'm seeing both here, though it didn't lasted for long. So in our market structure, we have what we call the break of structure. I'm coming in. Yes, sorry. We have the break of structure, change of character. Yeah, those are two important things to look out for when. Okay, so all these things I'm marking out are break of structures. Okay, so I'm running out of time. We have 10 minutes left. I think I'll send a new link to the group, then we'll continue. So I'll save the both two videos and send it to us. Okay, we still have one here. Yeah. So this guy here, oh, I'm making use of circle. That this was highlighted. Take it out. Where's my highlighter? Yeah. We should note the difference between basic did I say basic? Major break of structure and minor break of structure. Of this guy and this guy. Yeah, I think meant to have a break of structure, yeah, so Write this little guy here. Okay, so just it's just as I explained here. Where's the right up? Okay, here it is. So I'm having my two market structures here, both the uptrend and downtrend, which involve price creating series of what? Higher highs, higher lows. That's for the uptrend, lower lows, and lower highs for the downtrend. So let's mark them out on the charts. So this guy here is what? Anyone?
Higher high,
This guy.
higher low, higher low.
Yeah, that's correct. So this guy here is a higher low, not a higher high. Okay, higher low, higher low. So this guy here, no. This guy is a failure swing. This is what we call failed swing. This higher low here failed to break this higher high. So we had to have a retracement back here, which broke it. So I think I'm calling this guy no, I think this is the higher low, not this guy, because price failed to break this guy. So this guy here is the valid higher low. And we still have one here. This guy to be a higher low. And for a higher high, imagine. Yeah, so this is what uptrend. Hope it's all making sense. No one is getting lost or confused.
Yes, sir.
Yeah, so this is uptrend. Okay, it's 5 minutes. This zone here is what?
Lower high.
Yeah, that's correct. This is a lower high. Same goes for this, a lower high, a lower high, a lower high. And this zone here is,
Lower low.
yeah, that's correct. Okay, so at every point I marked out this is we have what? Break of structure. So break of structure is actually price taking out old lows or high. Break of structure can be either to the up or downside. It doesn't have to be inclined with the market trend. What did I pick? Not this. Deleting this. Okay, let me skip this for now. I'll come to that on break of structure. So that every line I marked out, we have what? A break of structure. US is a short acronym for it. Yeah, so we have what? A downtrend here. Okay. A minute. Yeah, sorry about that. I didn't know I've been taking drugs for this, just see no progress. But I hope I get better soon though.
Amen.
Okay, thank you. So this was our uptrend, and here we have a downtrend. And I told you after every break of structure, the next swing point is what? The next, that's in an uptrend, the next swing point is our higher high. So price started here, higher low, created our higher high. It broke this guy. Let's start from broke this guy to give us our new swing points, which is our higher high, and give us a new higher low, and took out our old higher high, our old swing points, breaking structure towards the upside. And this new swing point is where our higher high, and this is not a valid higher low because it didn't break our old swing point. So this is a failure swing. This is a new valid higher low because it broke this old swing points, giving a new higher high to this side. No, this guy, sorry, we have an higher high, a higher high here. Let me correct that before moving. Higher high. Yeah, so price broke what this guy now, this old swing points to create this new higher high. Are we seeing this? Hello?
Yes, sir. I can see it.
Yes.
Yeah.
Yes.
And this is our new high. This was meant to be our new, this guy here. It's meant to be our new what? Higher low. But it's not a valid higher low because price didn't take out this old swing point. I think I'm going to stop here and send us a new link on WhatsApp. Are we getting me? I'm having less than a minute. So just stay tuned
Yes.
and join up
Yes.
once we send the link so we don't waste time.